Let's take a look at some information and charts on Aave for Brave New Coin. Aave is a lending and borrowing protocol with a token that apparently does stuff and things. I don't think anybody could specifically tell you what that token does, but that goes the same for most tokens. Aave has multiple versions, multiple chains. That's going to make the analysis slightly more difficult over time, but they've got a version 1, version 2. They've got an AMM market where the lending and borrowing aspects are different, including market size and APYs, and they've also got a market on Polygon or markets on Polygon, but also with different APRs that look like they pay out in wrapped Matic additionally, so there's some additional incentives there. As far as the biggest markets, the usual suspects, stablecoins, Bitcoin, ETH, the top, the top 10 are stablecoins, Bitcoin and ETH. If we sort by deposit APYs, it's usually mostly junk or stuff people don't use or stuff that has an incentive. And here's one of the use cases for Aave. They can add Aave as an incentive token to a few things, as is typically the case. Things like Curve do this as well. They can goose the deposit APY a little bit to encourage deposits. So another thing to keep in mind that I don't always talk about with these lending and borrowing markets is if these APYs, which are variable, but if they are better than any staking on any chain, including ETH eventually, then that could pose issues for proof of stake. Because if I'm a guy with lots of capital and I'm looking to put it somewhere, am I going to put it in Dash with volatility risk, or am I going to put it in USDC, stick it on some protocol, Aave, Maker, Comp, Yearn, wherever? Yeah, you expose yourself to protocol attack surface, but you don't expose yourself to volatility risk of Dash, for example, or EOS. And I think as long as these borrow rates are high enough, it's just going to destroy proof of stake over time. As in, there's going to be less impetus for more and more people to want to stake on these coins. We're talking whales here, not Timmy from down the street with his $50, right? If you're a community member and a believer in those coins, of course you're going to stake, right? But otherwise, most sane, rational people are just going to go with USDC, put it on some lending and borrowing market, and just be done with it. So we can look at market sizes. Like I already said, we're getting in the billions here on a few of these, and borrow volume across the board is at an all-time high right now. So that's both bullish and dangerous, obviously, for the long squeeze component. If we're talking single collateral, if all of these are single collateral, which in essence I think they are, if any of these take massive hits in price, that's going to require you to deposit additional collateral. And probably why most of these with higher market sizes are stablecoins, right? Because you have to worry less about collateralizing them based on the underlying. So that's also something to consider. And if we look at the smallest markets here, kind of makes you wonder why some of these aren't deprecated. I talk about BAT all the time as a token that doesn't need to exist and only kind of exists to do other things like this, where it's baked into lending and borrowing. And interesting to see SNX, sort of a competitor, on here as well. So this is healthy and vibrant, probably the healthiest it's been. They have a good dashboard, good UI. It's stupid simple. I think it's easier to use than Maker. I've talked about that in the Maker video. Unless it's just like 2 clicks to deposit or 2 clicks to borrow, kind of how everything should be. If you look at all the swaps and the dexes, those are like 2-3 clicks to get through. There's no reading any super complex stuff. Anybody can do that, right? So that's definitely a benefit to all of DeFi. Interoperability, user experience, UI, UX, all that stuff is great. And yes, of course, there's a governance component for Aave. But in general, most people don't pay attention to this, don't care. But it does exist. If we look at TVL, according to DeFi Llama, TVL is at an all-time high for Aave as well. This is across multiple chains. You can see 11 billion roughly on Ethereum, 2 billion on Polygon, and staking 1.74 billion. As prices increase across the board on the underlying, you're going to see TVL increase. As stablecoin issuance increases, you're going to see TVL increase. That's something to keep in mind. This isn't just like necessarily more people doing something. It's all part of the picture. If we look at the stats for individually, version 1, version 2, version Polygon, for version 1, it's basically flatlining. You know, there isn't a lot of activity here. They still have TVL and borrow volume, but compared to the billions that sit on V2, it's kind of just not worth paying attention to, really. If we look at TVL, like I already said, it's at all-time highs, borrow volume all-time highs, liquidation volume. The next liquidation spike we have, whenever that is, 3 months, 6 months, 12 months, 24 months, is going to be the biggest, right? Every liquidation spike after this is probably going to get bigger and bigger and bigger because DeFi is getting bigger and bigger and bigger. Borrow volume is getting bigger and bigger and bigger. So I'd keep that in mind. You know, these long squeezes are never not going to be here. They're always going to be the gorilla in the room that when they happen, people are going to say, oh my gosh, what is that, right? But that's part of the game. You know, these liquidation spikes are part of the game, and they're only going to get bigger. Unless V2 or unless layer 2 helps keeping these collateralized in some fashion. I don't know. Just spitballing there as far as what could happen to prevent that sort of thing. Here's the info on Polygon. Dipped off a little bit, but has slowly been increasing. And maybe this is based purely on incentives, where there's TVL sitting here. As incentives fall off, it's important to follow TVL because it's very likely that TVL will fall off as incentives fall off. It only makes sense. And as of currently, most of it sits on ETH. So like I already mentioned, borrow volume across all of the major 3 maker compound Aave is at an all-time high. Aave holds the biggest slice just barely compared to compound, and then makers falling off more and more and more. These had been split 30-30-30, but lately maker or Aave has really picked it up along with compound relative to maker. So if you're trading these coins individually, it's something worth checking out. Where's the attention? Where are the incentives? Where's the TVL? Where's the borrow volume? How easy is it to actually use the UI? All these things I think are important factors when you're watching coin price. We can also look at market cap over annualized revenue, a PE type of ratio. Aave sitting here at 12.6, compound at 10.4, maker at 70, and then synthetics at 35, which is also essentially lending and borrowing. So this certainly doesn't help makers' case for the fundamental side of things because you want to buy things that are at a lower PE ratio. Those would be your comps and your Aaves of the world relative to SNX and Maker. Looking at token on-chain stats, which generally aren't super important for DeFi stuff, that's just the governance token. SNX on-chain activity is much more important because that's the collateral required for all of the lending and borrowing mechanics. Whereas Aave, if I buy Aave, I'm not really going to use it really per se for anything. I'm holding onto comp personally. Do I do anything with it? No, it just sits there. I hope it goes up in value, right? So that isn't going to show up on-chain stats. So as bearish as this stuff looks, the question is obviously, okay, it doesn't really matter, right? Because transaction counts generally will spike with speculation, and they've been declining roughly, kind of sitting at multi-month lows here, very near when the token was first distributed. So not a lot of uptake generally across the board. Average transaction value is rising with price a little bit here as well. So nothing super bullish there. Looking at NVT, ranging all over the place, measure of economic utility, probably not a signal that you can use reliably here. Active addresses though, not something that looks super bullish, but as these chains go, or as these protocols go multi-chain, it's going to get harder to see like the pure metrics here unless this includes Polygon, which I don't think it does. I'm pretty sure this is just the ERC20 Aave, but that's also something to consider. So this in a vacuum, definitely not bullish to see active addresses continuing to decline. MVRV in the fill back here, market cap over realized cap, another one I like looking at for transactional tokens, currencies, if you will. Also not really much of a signal here relative to price. I think it probably just needs more time to figure out if any of this stuff is actually relevant. This stuff just got birthed in Q4 last year. Aave, the search term on Google Trends, is the Finnish word for ghost. It has some other, if you search this, you get like ghost in the shell references as well. So this isn't a pure signal, but it did hit an all-time high in early this year, which very much was probably Aave, the token, That's fallen off a little bit, kind of back to baseline, but you don't get a pure signal here, right, either, because this is a real world word. Moving on to technicals here. This is the 1 year MA and the 1 year MA multiplier in the red. Generally how this works is you're buying in the green zone, selling in the red zone. And this did tap the green zone just briefly, as it did in 2020. And if you're trading just this in a vacuum, you're buying the green and you're selling the red, and the red is currently at 1200, and that's going to keep rising slowly over time. Something else to pay attention to here is that when this has gotten above the red zone historically, it's held that level for multiple months. So this isn't a immediate sell signal historically. It's been a get ready to sell, or just dollar cost average out of a position at that level. So we'll see if it plays out. It certainly looks like it's bottomed. And if DeFi takes off and regulators don't try to kill it, I can easily see this thing 3xing from here, because it's one of the strongest. It is a leader in lending and borrowing amongst the group. This is a busier chart. This is the pitchfork. Briefly got out of the pitchfork, but again, that 1200 plus level is where you want to be selling according to this. 5200 death cross, bull cross over the past month with that inverted head and shoulders that's playing out on every other DeFi chart. So I like bullish continuation here. I like bullish reversal. I like trend flipping bear to bull. And that's the first time it's flipped bear to bull since October 2019. So it had a full retracement based on trend metrics and survived. So that's exactly what you want to see. You want to make sure this thing finds support somewhere and then has another leg up. On the cloud, very similar story. It's tested sub cloud levels, or below the cloud, twice since 2020. This would be the third time, and it looks like it's well on its way to another bullish continuation run. So how this works with the cloud is you are ideally long from Kumo breakout to Kumo breakdown, or the TK cross here. You can see this blue and the red line. Hold that cross all the way until the end. And so you're out this entire time until it goes again, right? And then Kumo breakout. Okay, we're long again. Here's the TK cross. We're out. And how you play this here gets a little messy, because you do technically have a bullish TK cross with a bullish Kumo breakout. Ideally, you just trade that as a long. You trade all these as a long, and the results are whatever, right? So if this does get another bullish TK cross with price above cloud with a bullish cloud, that is definitely another long signal that maybe is a 3x, maybe it's a 2x, maybe it doesn't pan out, but the cloud doesn't really care. It's just telling you now it's okay to be long again. If we look at the 12-hour, most recently we had a bullish Kumo breakout, and looks like you're going to see continuation here as well. This may retrace to 310-ish based on this Kijun, but in general, definitely bullish. Over the past week, Aave BTC also has a pitchfork that it's mainly held above, oddly enough. Recently tapped below. Not a ton of signal here, but in general, the rate of change has held over time. And if this thing survives against BTC, it definitely wants like 0.2 or higher over the next 6 months. Definitely above all of the volume support, and above 50-200, which has held bullish this entire time. So I don't hate this as a long side upside potential. It's just extremely wide range here. And against ETH, it's kind of been down only since February. Bear div slowly building here over time, bull div slowly building over time, still kind of stuck in volume range. Ideally, you want to see this with a bullish 50-200 cross, probably above 0.165, above all this volume. And at that point in time, it may have another run, just like it did previously when it got above 0.165. So fundamentals for the protocol are excellent. Borrow volume all-time high. It's definitely not going anywhere unless regulators in the US try to kill it. And technicals, USD pair look phenomenal for a potential another 3x from 400. Against BTC, it's just a ranging mess. And against ETH, it still has yet to find a bottom. Lastly, I'll mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool, where you can send ETH or USDC or just watch what I'm doing. You can see AUM, allocation, performance, all of the coins I'm in here on the DeFi portfolio, all the fun I'm getting into on the yield plays as well as trades, when, where, for how much, deposits, withdrawals as well. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.